Good morning and welcome to the Banking Revolution. My name is Stephen Morris and I am banking editor of the Financial Times, and I'm delighted to welcome you to this two-day digital event held in partnership with Mambu. The theme of the event this year is rebuilding trust in banking. It is a timely topic. We are now 13 years on from the global financial crisis, and doesn't time fly? And banking is once again facing a crisis of trust, but this time for very different reasons. Now, when banks are needed most to support the post-pandemic recovery, their very existence could soon be under renewed threat as competition intensifies from all angles. Their branches have to close, and the relationship between customers and their institutions becomes purely virtual. On top of this, there is a perception that finance is more disconnected than ever from society, as the industry prioritizes scale, profits, and market share in order to survive. Yet, without the support of the public, banks do not have a function. Built on trust, they now face a stark choice: revolutionize to regain the loyalty of society, or be replaced by new entrants who can. Trust, however, must be earned, and the evolving expectations that the public and society have of their banks and those who might want to replace them in certain areas are very high. So over the course of the next few days, this event will explore whether the industry is ready to acknowledge that business as usual will no longer work in the current environment, and that it is in their own interest to change. Most have already committed to this. We will debate whether the overall purpose of banking needs to be redefined, and how it can be correlated with the corporate and stakeholder responsibilities now expected of all companies. And this is especially acute in the UK, which is preparing to host the COP climate conference next month. We will explore the extent to which policymakers can and should do more to drive real and enduring change for the global good in financial services, and how it can hold these new entrants, everyone from big tech companies like Amazon or Google, all the way down to the smallest fintech startups, to the same standards demanded by customers. Technology will also feature heavily over the next 2 days. Recent research done shows that more than 2/3 of banks are convinced that they will lose market share within the next couple of years if they fail to digitally transform. And often this transformation will have to be radical. Every week seems to bring more news of branch closures as customers migrate online, which has been driven and accelerated by the pandemic. But of course, this is socially contentious, with issues such as financial exclusion, lack of access to cash, and face-to-face service high up politicians' agendas. Our speakers will also explore how financial institutions can harness technology to do better by society in this vein, tackling issues such as ageism and, as I just mentioned, exclusion in banking, either regional or in particular social groups. The FT's lineup of speakers is exceptional, if I do say so, as always. A real who's who in finance, banking, policy, and thought leadership. I want to take this opportunity to thank them in advance for making the time to join us today and tomorrow. We look forward very much to hearing their insights during this event. And I would like to thank Mambu again for partnering with us in these important sessions. Finally, a few housekeeping items for our participants and viewers. This is intended to be as interactive as possible, so do note that you can join the conversation throughout the event via the Q&A box on your screen. Myself and the other hosts and panelists will aim to ask your questions throughout every session. You can also share your thoughts and tweets on social media using the hashtag #BankingRevolution, all one word. Note that all sessions for the event will also be available on demand for 30 days afterwards on the website. Please stay tuned for the first session of the event, where I will be talking with Mairead McGuinness, EU Commissioner for Financial Services, Financial Stability and Capital Markets Union, and one of the most important people in deciding the future of global finance. So thank you all very much, and I hope you enjoy the next couple of days. Good morning. I'm Stephen Morris, banking editor of the Financial Times. I'm delighted to be joined today by Mairead McGuinness, EU Commissioner for Financial Services, Financial Stability and Capital Markets Union, for a discussion titled Perspectives for the Banking Sector Beyond the Pandemic, in which we will explore how banking is changing in light of the global COVID crisis and rapid technological developments. So, Mairead, driven by necessity during the pandemic, there has been a sharp acceleration of digital adoption in financial services across the world. Some have said that there has been a 3 to 4 year jump in just an 18-month period in this regard. So, from your perspective, how is technology transforming the way we consume financial services and interact with banks, particularly in light of the last 18 months of COVID?
Well, look, what happened with COVID was unexpected, and it has had unexpected results. For example, technology has allowed us communicate, and people could work from wherever they were based at home. So it was good we had technology. And I think the financial sector was able to keep going as well because it used technology to allow customers access financial services. I think what we've seen because of COVID is a rapid acceleration of change that was coming anyway, but would have happened at a much slower rate. So there, if you like, a condensing of change over time to a very short number of months. I think there are some practical implications for regions and for banks, obviously, and their financial planning. I mean, branches are still there, but less of them. And I think we might even look at how many will survive beyond this pandemic, because already in some member states, we're hearing that branches will close, or those that did close will not reopen. But during the pandemic, I think what's really important to give credit to the banking sector on two fronts. One, it was really helpful that our banks were strong, well capitalized to help us through this crisis, to help us transmit the public authority funding and support for the economy through their services, and to keep businesses that could keep open, with cash on hand, with financial services, and equally for customers to keep buying online, as many have. We've a huge increase in online transactions. So there is no doubt that the landscape we're looking at after the last 18 months is very different than it was at the start of this. I don't think any of us predicted that the pandemic, which is still with us, we have to be mindful, but it would have taken this long to at least come under control. And therefore, it is not a surprise that we are seeing dramatic impacts on the financial sector, banks included, and of course, other areas of our economy as well. And maybe it requires us all to accelerate our thinking about the future of banking and indeed the future of finance, given what we have seen happen within a period of 18 months.
Yes, exactly. I mean, banks were really given an opportunity this time around in 2020 and 21. As you rightly point out, we are not clear of this crisis yet, to re-establish their social utility. The fact that they can be part of the solution to global problems instead of the cause as they were in 2008. And I think their resilience and innovative and fast use of technology played a major role in this. But when you see rapid change within the financial services industry, you also have to see rapid change on the oversight and the regulatory front as well. So what do you have planned at the Commission to make sure that the EU is ready for and resilient to such quick technological change?
Well, a number of points on this. First of all, we already had tabled proposals about digital operational resilience. So this is a crucial part because during the pandemic, we saw how, cyber attacks and fraud increased. So we have to be really vigilant around that piece of the story. And also the role of cryptocurrencies and all of this new discussion around even digital currencies in the future, central bank digital currencies. What we have is at the moment legislation going through to address some of those issues that I have just raised, but equally, and one of the things we didn't talk about is that the change isn't just happening internally within the banking system. It has also been impacted by changes externally. So the increase in fintech, innovative new providers of financial services, large tech is there as well. So as well as the COVID impact, we're having these other outside forces working towards change within the banking system. Our role is really to make sure that policy is appropriate for today and tomorrow. And I think when it comes to risk and how we measure risk in the digital world, we have to think and work differently than in the non-digital space. And that's why we are looking at, parts of our legislation to see if it's fit for purpose. So we talk about same activity, same risk, same rules. And sometimes I think we have to be conscious that even if the activity is the same, the risks might be different depending on whether it's offered digitally or otherwise. So I think both the internal dynamics of the COVID impact, the external, field, which is now very, very innovative. There are new operators coming all the time, and that's good because it's competition for banks. It makes them step up to the plate, if you like, and it gives more offerings of services to consumers. But it is rapidly evolving, and I think the rate of change from a policy point of view can be quite overwhelming. So we really are focusing in the Commission to make sure that we can manage change and not be overwhelmed by it. And equally, we know that there are many difficult issues coming up for us around the banking sector that we will have to manage carefully, because we do say that we want a very strong banking sector in the European Union. And part of that is the issue of banking union and indeed capital markets union, but also part of it is about the banks. And I think they do know and realise they need to increase their investments in the whole digital space, in technology, in the instant payments area. So there's a lot of opportunities here. There's a lot of concern because change and disruption does cause fears. I think one of the areas that the banks repeatedly say, and I think we have to look at this very seriously, is the level of profitability and whether there is sufficient profitability to match the investment need into the digital future, which will also require ongoing investments. But I suppose one of the things that I think about, and you mentioned the word social and that the bank's obligations wider than just providing services. I think there will be some very difficult discussions in member states, because a bank in a town or village or a rural area, indeed in a city area, customers that use banks don't like to see the service being withdrawn. Now, fewer and fewer people are physically going to a bank. They couldn't do it during COVID, so the habit may be broken. But I know from listening to parliaments and colleagues that there is a sense in which there may be some pushback where, you will see in parliaments debates about what sort of banking sector do we need to see as opposed to have, because it may come to a stage where we will have very few branches. Is that something that society wants or not? Or are there ways of banks offering their services through other service providers that will continue to operate in towns, villages and cities? So I think today, anyone who thinks in parallel tracks will not actually stay on track. You really need to think in a very circular way. And it's interesting that we talk on sustainability issues about circular economy. When it comes to finance, we need to think in a more circular way, not in the way of the past at all. Interesting too, a younger generation use the banks, if that's the word they use at all, very differently. Many of them do not have a relationship with a physical place or space. They don't know their bank manager. In the past, the bank manager knew everyone. Today, that is not the case. So I think we need to talk about things like digital identity, security around privacy. All of these things will become hugely significant if this trend continues the way it is. I would caution, though, that sometimes if the change is too rapid, it will result in societal, concerns, which will be reflected in political concerns. So I think we do need to have a conversation about these changes, why they're happening. Can we manage them in a way that doesn't result in some members of our society and community being excluded and having no access to financial services? Equally, and it's been an interesting one raised with me recently, the location of ATMs across the European Union. Not only are branches closing, but ATMs are being removed. So we defend the role of cash at the Commission. While we want people to use other innovative services, we equally want to make sure cash remains something that can be used. So if there are fewer and fewer and fewer places where you can get cash, that really is something that we have to look at the consequences for. So as well as being excited about all of this innovation and trying to regulate it and manage the risk, but also reap the opportunities, there are some societal questions which will cause debate. And I think it's healthy to have that debate and to make sure that we, in our, look to the future, don't result in parts of our society that are already disadvantaged being further disadvantaged. So I think that in all of this great rush forward with technology, we have to be mindful of that. But at the same time, for example, for migrants, submitting remittances to their families back home, which is absolutely vital, we could see the cost of those really going down. And that would have an enormous benefit for the families who rely on this money. So one of the things I've had to think through very carefully in my role here is when we use the word vulnerable or we need to protect, we have to be very careful that we use it appropriately, because we may shoebox different groups in our society as being vulnerable or they're needing protection, and we may not get that right. So that's why we need to talk to all our stakeholders, the consumer organizations, the civil society, to understand where people are at. Sometimes we say older people aren't using technology. Some would say to me, that's an insult. I do use new technology. So again, it's a question of balance here. And I think if we were to rush towards a digitalized banking system and have it in place by the end of this year, that would be too traumatic and dramatic. It wouldn't work. But we do see already the trend, if you like, the direction of travel. And I grew up, obviously, seeing a number of different bank branches in my hometown, in the member state I know best. And I never thought I would see a day when there might be less of them. There certainly will be one less. But I'm also seeing that some banks are looking at other providers so that their name will be present, but it won't all be in a separate building. So, you know, structures will change. The need for physical infrastructure definitely will change, but the need for both the technical and the technology behind the services. And one issue that does concern me, and it concerns me whether I'm looking for helplines on my telephone or my mobile phone or whatever, you know, because today we rarely get to call a person that will answer and say, my name is, what's your problem? And I think we need to look very carefully about, first of all, who is providing the services? Are they being sufficiently trained and rewarded? And is there too much pressure on that back office system? I think, and my hunch is that this is an area where we will need to be very vigilant, because that back office system will determine the quality of the service and the capacity of the system to deliver for customers. So any hiccup that is now perhaps less visible because we don't have physical branches could cause enormous problems. And I'm also mindful that many people who work in those situations, and some are working from their own homes, maybe their own apartments now, it's a very tough job. It's very isolating. And that's one part of the overall holistic approach to a banking and a financial system, which should not allow the parts of it that become invisible become less transparent and therefore less rewarded in terms of both training and indeed salaries and wages that are attached to it, but particularly conditions. Because there is a very different world when you are meeting your customer and having a chat across a counter. It's a more warm experience. Sometimes the experience on headphones and trying to get information is less so. And there's pressure on both the customer who's calling and on those who are answering the calls. So it's an area that I've sort of been doing a lot of thinking about. And I think that could be perhaps almost a weak link if we're not careful about managing that. And I'm sure the banks are aware of that.
Yeah, just a vast array of issues you covered there that you're having to think about in a very, as you said, compressed period of time because of COVID. Especially in the UK, which I'm most familiar with, but across the EU, it is such a socially contentious issue, closing branches, access to cash. And there's also an emerging disparity in that your more traditional established lender has a branch network. And there's a lot of political pressure on them to keep this costly network. Whereas you have new entrants coming in with no branches, perhaps no one to speak on the phone, everything, all customer service automated. So there is, in a sense, an unlevel playing field there. Why do HSBC and Barclays have to maintain a branch network of thousands, whereas JP Morgan Chase's new UK bank or Monzo are allowed to have zero? Technically, they're still the same banks with the same social obligations. I mean, how do we balance that?
Yeah, I think that's a very valid point because it does look very uneven and maybe unfair, but the world is never fair. There are 2 points here for me. One is that political pressure will work to some extent and at some times where, you know, whether it's a bank or a whatever provider will, you know, listen and react to the political pressure to hold on to some branches. But frankly, I think the pressure will come at the financial side as well, where banks will say, look, we can't continue to fund this because there are very few people physically coming into our branch and we need to reorientate our investments towards the digital space. On the other hand, I think we need to get the balance right. I mentioned that it would be inappropriate, in my view, to think of a world at the end of this year, for example, where bank branches disappeared. The banks wouldn't even go there and nobody is ready for it. One of the points that was raised with me just earlier today is that for a bank to close branches, it's not cost-free. In fact, it's quite costly. So there has to be a cost-benefit analysis of, if I close a branch, what are the costs for the bank? How long over time can they be worked through? So it's not a simple equation. But I would suggest that in the political space, and the issues are the same in Europe and the UK, and I think globally, is that the provision of services, we're talking about finance, but other services as well, have moved from places to spaces, if you like. So from real to the digital world. I think if we go too far, we'll have a reaction. And we will swing back a little bit. And I think it is around the point of customer service and the quality of it. Because very often the amount of frustration, and I was a parliamentarian, so many of my electorate would come to me saying, look, I can't get through to this service provider. And when I do, I have to press several buttons and then they hang up. If you keep doing that as a bank or as a telephone company or whatever, it does come back as political pressure, because this goes into the political system. So I think, yes, there will be that political reaction. Those that don't have branches have opportunities, perhaps. That's why those who have to look at where they fit into all of this to make sure that they are fit to continue for the medium and long term. And including the other thing, which we won't discuss at all now, is around the whole sustainability question and how loans are given out to what enterprises, how banks will have to report what they are actually financing in terms of our goals around climate change. And this is a big issue in the UK with COP26 coming up. So there is an enormous amount of pressure coming on the financial system. A lot of change has happened. It will continue to happen. The big thing about change is to recognize it's happening rather than close your eyes. The second thing is to make sure you're not overwhelmed by it, that you can manage it in as far as that is possible. And the third issue for policymakers is to think outside the box and to look at how, when we're framing legislation, either new legislation or revisions, that we try and be future focused beyond the here and now. That's difficult, but if we consult widely, which we do, I think we can get there and make sure that all of our rules, regulations are fit for the future, not just reflective of the past.
Yes, exactly. Now, there have been enormous changes in the competitive landscape, as you just referenced. We're talking from everything from the non-bank financial sector stepping in to do vast sums of lending every year in a less regulated environment, fintech startups, and the increasing encroachments of big technology companies such as Google, Apple, and Amazon and the like, increasingly getting first into payments, but maybe other parts of financial services initially through partnerships, and then they could choose to do it alone. Banks really do appear to be under attack from all sides, if you look at it from that perspective, and often from those with far deeper pockets than them, and far better track records, I think, in providing technology to improve customer service. Do you think going forward in the next 5 to 10 years, banks will be able to compete and keep up with investment and keep up with the level of services potentially provided by new entrants?
Look, I think you framed the landscape really well, because there are so many different pieces to this evolving jigsaw. You mentioned big tech, and in fact, I think that's where the most fears are around the capacity of big tech to become financial service providers. I think the worry for me is that if you look at our banks today, or even reflect on the past, individuals would get many services from a bank, maybe their insurance, their pension, their mortgage, their business loan. I don't think that that's what's happening today. I think younger people are going to different providers for different services. The question is, are those new providers taking the best paying pieces of the pie that the banks currently have? Now, of course, you can, express sympathy for the banks, or you can actually say to the banks, this is the real world here. You can respond. You either sit and do nothing and you then become irrelevant, or you look at what's happening and get part of the action. And that includes banks looking towards fintech, so linking relationships, whatever it is. So the investment they need to do may already exist, and they may be able to source it rather than building from scratch. I think one area which is very open, and I leave this as a question rather than any particular answer, we have opened banking data towards so that these new providers could provide those extra innovative services. And they're doing that, and it's really worked. I sometimes hear that when it comes to big tech, they don't know all my spending, but they know all my spending habits. They know what I like, what I don't like, where I go, when I go, how I go. I mean, I wish they didn't, but they do. So in one way, I'm often challenged by those in the financial system who say traffic at the moment, data is in a one-way direction from banks, financial system towards others. What about in the other direction? Now, that's a big, big, big question, which I think we need to at least open to see about this issue of level playing field, to see whether this would be to the advantage of customers and clients and citizens or not. And I think what's really important for me is that we shouldn't be afraid of opening these questions and also saying very clearly we don't have all the answers. I mean, you could also reflect that reality in the discussions around digital currencies. I know the UK are looking at a digital pound. You know that the European Central Bank is also looking at a digital euro. So in many of these innovative sort of developmental issues, we first of all need to write down the questions before we can even go towards answers. And I always say to colleagues, look, I bet there are other questions we haven't thought of. So in one sense, what I'm really happy about, even though we've lived through a horrible COVID, is that we can come together physically, because sometimes you need brainstorming to actually get to grips with the changes that are coming, you know, over camera. And this is great, but sometimes over Zoom and camera, it's not quite as easy to kind of have this interactive conversation. And to some extent, none of us know where this will eventually go towards, but we know that the path we're on is one of great change. And I suppose with my eye towards financial stability, because that's key for all of us, is to make sure that nothing happens within these wonderful changes, and some of them quite frightening equally for the financial system, that we don't allow for financial instability. So that's why the work of policymakers, regulators, stress testing becomes really, really important, as indeed does the issue of financial literacy. Because today a young generation can, you know, they can bet €5 on a horse from their phone, but they can also invest €500 in something or buy cryptocurrencies. And maybe some of them don't need to have improvements in their financial literacy, but I bet all of us could do with a little bit more learning to be wise to what we're doing, when we're doing it, because a click of on your phone happens very quickly, but the consequences can also be very impactful. So I really push this issue of financial literacy, and I think the Financial Times is doing great work. And I commend the work you're doing in relation to just getting a better informed citizen around the financial system.
Yeah, it does strike me that, you know, this unbundling or picking apart of the full service global universal bank could have, you know, big knock-on impacts, both on the profitability of those institutions and therefore the pricing of financial services. But as you said, also the potential impact on financial stability as well. If banks have all their best business poached and pulled out, you know, what are they left with? And do you think the solution to this is to look tougher, you know, at new entrants in terms of the rules and regulations that they have to follow? I mean, barely a week goes by where I don't hear a bank executive complaining, as you said, about the unlevel playing field. Do you have any kind of thoughts or plans in that regard?
Yeah, well, I think I mentioned this idea of, same activities, same risks, same rules. I think we do have to be mindful that sometimes it's good that there is a capacity for small fintechs, if you like, to have space to grow or to develop. But then you also need to look at where there is an unlevel playing field in terms of regulation, but equally where there might be problems if things go wrong. And I think we've had some big examples in the member states about where things can go wrong, where we think everything looks good, but in fact isn't underneath. So I think the job of regulators and supervisors is more difficult, in fact, in the digital era, because time gets condensed. So things happen very quickly. Even recently, just this morning, we were talking about our anti-money laundering work here in the Commission, and how, you know, we need to try and get ahead of those who are thinking of, you know, keeping on this criminal route and putting dirty money through the financial system. I think in a digital world, it's more difficult with cryptocurrency. currencies, it adds to that complexity. So, I mean, I hear all of the concerns of the banking sector, but I also hear that if you were to, and we wouldn't dream of it, stop innovation, so stop fintechs, I mean, you'd actually have a banking sector that probably wouldn't innovate or move. So in a sense, we need that competitive spirit to get our banks to move with the times, if you like, to look at their business models and to adapt and change. And I think all of us in our working lives have always had to adapt and change to the circumstances. I think the financial system is no different. And maybe the first big shock to banks came after the financial crisis, when trust in our banks just disappeared. Happily, and I think this is reasonably fair to say, that the handling during the COVID crisis, the banking system has emerged with a better reputation. Not everywhere, but I think people felt, yes, the banking system pulled its weight. So that should be a helpful, if you like, base to try and then do all of these changes in the digital world, to have a conversation about what sort of rules or regulations we need. We'll be looking at Basel III, for example, reforms very shortly here, and trying to make sure that they're fit for purpose, that we meet our international obligations. So I do think that the job of work is enormous, because the rapid change requires us to really think carefully, strategically and holistically, that perhaps wasn't as necessary in the past. But the past is certainly not the present, and it's not the future. And therefore, I think the more I listen to the concerns of the banking sector, the more I am also challenging the banking sector to say, you have a strong place in Europe. You can strengthen it both internally, looking at your own management systems and investments, but you can also work and push your governments towards banking union. So, which is a difficult discussion piece, but we are very committed to the banking union. I made a strong plea for that this morning at a conference, where I said, look, we have done a great deal. We strengthen our banks, but we have a lot of work to do. And the prize is not so much for individual banks. The prize is that the citizen, the user of the services, will see that they get better services because we have a banking union that can operate across borders, that we fully trust, that where there's a problem, if something happens, that the system itself can fund that problem towards resolution. So look, a lot of moving pieces. It's an exciting and a challenging time, but it's no time to sit and ponder for too long. It's a time to engage and listen and reflect, and sometimes to change our minds, because we might think we have a solution, but sometimes that solution, is less, if you like, valid when you take everything into consideration.
Yeah. And just further to your last point, Capital Markets Union, and if I can squeeze in one last question in our time, I'd like to ask about consolidation and mergers, especially sort of pan-EU, different cross-borders. Everyone agrees that Europe's banking system is too fragmented, is not profitable enough, and needs to bulk up in order to be able to compete with the tech spend of US banks, but increasingly new entrants. However, no one seems to be able to affect this. What can be done to break the deadlock?
Again, to your very point, I think given what we've just discussed and the pressures on banks, it seems to me quite obvious that if an individual bank hasn't the resources to invest in the future, it needs to either come together with others and join forces to be stronger to make that investment. I think what's really key is that we must make sure that our regulation doesn't impede it, but rather can help it to happen. And that's a piece of work that we're very much conscious of, to make sure that when we have this vision for banking union, that we work towards all of those elements that will allow us complete banking union. I think, again, to come back maybe to a point we discussed in detail about the social and political dimension, what we need to do is communicate perhaps better why banking union is important, why consolidation may be necessary, across borders and indeed internally. And then we have to really try and reassure citizens that there will be competition still, so that they won't be left with one provider. Or indeed, as some would say, we can't be left with banks that are too big to fail. But that will only happen if we fail to complete banking union, where we are and have the architecture to put in place to make sure that if there is a failure of a bank, that it is dealt with in a timely and orderly fashion and doesn't disrupt financial stability or indeed cost the taxpayer money. So I think a lot of what we talk about, while it is financial and it is technical, it has to be spoken of in the reality of our economies, our communities, and our political system as well. So I think these debates that you and I are having need to happen in other places, and I think they will in committees of parliaments right across Europe, I'm sure in the UK similarly, where there's deep engagement. I think we need to be very mindful of is that those who think everything can stay as it is today, maybe that's a nice thought or maybe not, but it's not a real prospect. I think we all know that nothing is going to stay as it is today, and that things, even if we don't work towards regulating this, it will happen anyway. My perspective is that we need to manage it. And we need to take into account all of the things you and I have discussed, and perhaps other things as well that will come into this entire process. What we need are banks that can lend. We need a capital markets union that also is there to support this transition, because the banks aren't, capable of doing it all. And we need our investor community to look towards how they can invest responsibly towards all these sustainability challenges that we are now committed to doing. So I think what we've done in our work in the Commission is really front and centre, certainly of our Green Deal agenda, and the banks, the capital markets union, the investor community, asset managers, pension funds are all part of it, as is the insurance sector. So things are coming together, in my view, in this more holistic way than perhaps in the past. And I think out of that will come some very good results. But having said that, the road could be bumpy along the way. And I think that's why people should put on a seatbelt.
Okay. Well, thank you very much for all those thoughts. That was a really fascinating session. And we didn't even get on to Brexit. So thank you very much for your time today. And I hope when we next speak, we can do this, as you said, in person. To our audience, do stay tuned for the next session in the FT's Banking Revolution event, which will also be hosted by me, a panel discussing how banks can reset and rebuild trust in financial services. Thank you very much.